guys, welcome to webinar number 7 of the Alphas Earn Biz program. What an amazing journey it has been so far. Today is Friday, the 6th of October. Where has the year gone? Where has the program gone? But we are here together again and again once more. Thank you so much to all of you who show up and who are investing your time in growing your business and really in just bettering yourselves. We have another exciting webinar lined up today. But before we get started, you will notice we have a different face on screen today. And that is because Portia isn't with us today. She's had a family emergency to take care of, but no stranger to some of you. We have joining us this morning, Patricia, who is one of the coaches on the program. And today she is going to be my co-host. Patricia, do you want to greet the folks, greet the congregation?
Thank you for the warm welcome, Darren. Hello, everyone. I'm happy to be seeing some of my cohort here checking in. I'm happy to be here, and thanks for the opportunity. Portia is P, Patricia is P, so all is aligned. I'm here to fill in for Portia, and I hope all will go well, Darren. And I look forward to just engaging the participants.
Awesome. It's going to be a great time. I think the one thing that I think right off the bat that we want to mention is that today's webinar is going to be very conversational. So as much as we are presenting all of this content, we really want you to walk away today understanding the content. And so please feel free to raise your hand, ask questions as we go. We also have our guest expert who's going to come in later. And I do know somewhere in the background, we have our other coach, Brendan, is also on the line. And so I might just bring him in to come and add some value here and there, because really we want to just make sure that we understand. Now, we know today's topic is financial recording and reports, and this is really where the rubber hits the road. Mike Mokoka, who is our guest, often says that if you can't measure it, you can't manage it, and that's why financial recording is such an important topic. But before we get into it, let's do a quick check of where we are in the journey. So you will see today we are at webinar number 7, where we're talking financials. This is part 2. Remember in part 1, we spoke about costing and pricing 2 weeks ago. And so today we're doing record keeping and reporting. And then we've got one more webinar left after this, which is going to be compliance. And then it is the big day, which is close out, graduation. Some of you are going to be pitching, and I do know that you are working with your coaches, as well as you should be receiving pitching tips in the Facebook group and on WhatsApp as well. Patricia, maybe you want to just touch on how coaching is going, maybe a couple of anything related to the coaching part of the program?
Yes, Darren, thanks for the opportunity here, because when you get the webinar skills, the training, and then you have to go and reinforce or apply the learning into your workplace, one of the important things is to talk to your coach, check in with your coach. So if there's anyone in this group today who still doesn't know who's supposed to be their coach, they need to reach out to Iviwe. But if you are aligned with your coach or you've missed a few coaching sessions, please reach out to your coach too. It's very important to get that one-on-one, and you've got a wealth of opportunities, because the coaches bring in on board a wealth of skills and expertise, and they run their own businesses for that matter. So if you haven't done your second coaching now, I think you need to check in with your coach. Thanks for that.
Awesome, cool. Let's move on. So let's get into today's topic. And as we mentioned today, we're talking about financial record keeping, and we're talking about all of that. And so it's so important to understand why keeping financial records is important. And you need to personally understand your finances and the finances of your business to effectively manage your business, and also to ensure that your business is sustainable. And I think maybe at this point, I'd actually like to bring in Brendan, who is the other coach. Brendan, if you could maybe turn your video on, turn your microphone on, and maybe you can elaborate for us here and tell us a little bit just why it is important. Why is record keeping important? Why are these financial systems and processes so important in business?
Okay, a lot of people find the financial recording to be a kind of like a slog. It's a hassle. Why am I doing this? And I used to think the same way. And when I started out in business, I'm probably before most of you were born, and I didn't do them for a long time. But the point is that without the recording your daily financials, what you spend, what you bring in, leads you to be able to develop a budget. You can use an Excel spreadsheet to develop a budget and project what you're going to spend, even if you use the same figures as last month and repeat them again and again. You're able to see into the future is number one. You're able to see. So for example, I know that with my business, which is a mentoring and training business, I know that in February, March and April, I will be short 11,500 Rand or earning less, and I need to already be starting to work to pick up that turnover so that I'm not going to be having my lights permanently off. This type of thing you need to be able to be doing. Also, you're able to look back into the past to be able to correct mistakes. Your pricing could be inaccurate, your buying, you could be overspending in certain budgets. So this is all about having a dashboard, much like a car. And how much petrol do you put into the tank when you don't know? Or what speed are you going? How far are you going? You need to be able to know the most basic elements of your business in order to be able to manage it correctly. And as Darren said a little bit earlier, you can't manage what you don't measure. And measuring is the basis of the financial systems that you need to establish in order to run yourself a profitable and sustainable business. Thanks, Darren.
I love that. Thank you very much. And so there you have it, guys. So the reason why financial recording is so important, I like how Brendan put it. It helps you see into the past, but it also helps you see into the future. And so here you can see that these things affect your projections. It affects how you are able to set sales targets. And so that's why you have to master financial recording and record keeping. All right. And so obviously it takes a little bit of basic accounting. Patricia, I know you want to talk to this one.
Yes. Now that we know how important it is to keep record and to understand what's happening with your finances or how the business is processing its finances, we want to encourage you. You may have an accountant, bookkeeper, external person doing your books, but it is very important for you to understand what goes into that, because your bookkeeper will be processing things that come from you. So if you don't understand the importance of each and every aspect, the transactions that need to go through this process, then you won't be able to manage or to supply the right information to the bookkeeper or accountant. If you're doing it in-house, you need to make sure that you capture everything, because financial record keeping means you are accurately recording what you have. For you as a business owner, you'll be able to then decide whether the business is doing well, the business is struggling where it's struggling, or do you need more investment, or do you need to look for external investors, or can you use your own resources to invest? So it's very important to know how the financial records are compiled, the accounting process of it, and how these records can be interpreted by yourself to make better decisions in your business. Before we move to the next slide now, Darren, I just want to ask people in the chat, just respond to a simple question. Are you aware of what financial records you need to be keeping for your business to get the right record? If you are, say yes. If you're not, say no, I'm not aware. If we are not sure, say you are not sure. We just want to sense who's aware of what's going on, why and what records need to be in place to get the right reports coming out at the end.
I like that. In fact, what we could also do is, if there's anyone who's willing to share, please raise your hand and let's put the question out there and say, so how are you currently keeping records? Maybe you're doing it correctly, maybe you're not doing it correctly, but anybody who's open to share a little bit about your business and how you are currently keeping records, let's have some hands up and tell us how you are doing it and how you're doing it at the moment. I do see some messages in the chat there. Patricia, you can help me read them there.
Yes. I can see someone says, Muraro says, yes, I use an Excel spreadsheet. Sisonke says no. Ribone says yes.
Somebody's saying I depend on my bank statement. Sandile
Yes.
there. Who writes down what they spend? Okay, work closely with your accountant. Cool. Let's have some comments. I saw Pearl's hand was raised. Pearl, you can unmute yourself and you can give us your input.
Morning, everyone.
Hi, go ahead.
Hi, Pearl.
I'm currently using a book to write down the stock that I receive, the stock that I rather purchase. And therefore, when I have a stock going out, I then scratch out and write.
Pearl, we're losing you there. Your connection's not too good, but I think I heard the gist of what you said, so I'll try and reiterate it. So Pearl says basically she's using a book at the moment. She'll write down all of the stock, and as she sells it or as stock goes out, she simply scratches it out in the book, and that's her form of record keeping. Love it. Thank you so much for your input there. Molokhadi, let's hear your comment.
Hello, everyone. Currently, I'm using this system called Zoho Book. So I do record my expenses and all the incomes. And then what I haven't recorded yet on that is like every product that I'm using. I haven't yet what can I call it? Like put it into description, like if let's say I'm doing jewelry, let's say an earrings, I haven't recorded or if I'm charging 60 rand, all the material that I'm using, the time and everything. So I haven't started yet on doing that, because that app also requires me to do that, so that it will be able to help me on the profit. So I haven't done that, but for the records and the expenses, so I'm using it.
Nice one. Thank you for sharing. I think you're on the right track. It's just now about making the time and having the discipline to sit down, get those codes in there, list all of those items, so that and you'll see it will make it so much easier when you start invoicing and quoting using those codes, because it will be in your system. Thank you for sharing that. Patricia,
Absolutely. I think Molokadi, you're on the right track. You're doing something, and it's important to start doing something. I can see also on the chat, Dekane saying yes, they've got an app, and I can see a few people saying yes, which is exciting for us in this program, because the importance of this program is to make sure that people are aware of the finances and how they manage them. It's a total financial wellness for themselves and the business. So I'm happy to see, yes, we're doing it everywhere. So I'm going to move on to Darren, to the process itself, because we spoke that accounting is a process to keep the record. So we want to highlight what the process entails. I think simply the flow that is shown on the slide is that there is something called the input, then there's something that's being processed as you input, and then there's something that needs to come out as an output. So we start with discussing what the input is. So the accounting process for me is really where you take all the transactions, bring them together, record them, and we'll move and discuss what these transactions come from. They come from what we call the source documents, and Darren will expand on the source documents later. You take the source documents, you input them, and then they get processed through different process equations and formulas in the accounting field. So in the different formulas could be journals. You enter the journal, you record it, you move from journaling, you take it to trial balance, you move, but all that detail happens. What's important is to understand that if the input was insufficient or incorrect, then obviously you're processing something that's incorrect. What will happen is the end will be an incorrect record. So it's very important that we understand the process, we understand what goes into the process, we identify what record keeping we need to have to make sure. I think the example that Molokati was making about herself, that she is recording some activity, but she's not costing properly. So we can see now, if she says she's making a profit or a loss, clearly it's not an accurate record, because some of the inputs are missed in the process. So in having said that, we can move to just understanding that in this process, we need to make sure that we bring in the source documents. So Darren, can you talk into the source documents?
Sure. So source documents, guys, these are literally documents that are happening or that are in your business all of the time. So the first one is obviously quotations. Now, you know that when you are running your business, you will generally generate quotations. This is where a client says to you, hey, I'd like for you to bake a cake. You need to quote them before you just decide to do the work. And very important, we've spoken about this before when we spoke about pricing and all of that. You want to make sure that you take all of the costs that you incur into the process so that you understand you are quoting correctly. Then the other one is obviously an invoice. So after you've quoted, your client will generally accept your quotation and then give the go-ahead for you to do the work or to deliver the service or the product. And most likely, depending on how you structured your business, you might require a deposit. All right. You then move to the next stage, which is generating your next source document, which is an invoice. All right. So invoice is where you now ask them for payment. All right. You are saying, great, you've accepted my quotation. This is what I'm going to charge you to do this work, to deliver the service, to give you this product, and you present them with an invoice, which could either be an invoice or a tax invoice, depending on whether or not you're registered for that. We'll talk about that later. And then the third source document, which you generally generate, is a receipt. All right. And so a receipt is where you are basically giving the client a receipt to say you have made payment. Here is this is for your records, but it also is for your it's actually a record for both of you, you as the supplier as well as your client. All right. And then source documents that third parties will issue to you as a business is obviously also invoices and receipts, because remember, you've got suppliers that you are also purchasing from. Then you've got account statements that come through where you are paying your suppliers or paying your providers, if you want to call that. And then a bank statement is also a form of a source document. I think somebody said earlier on in the chat, currently they're not keeping accurate records, but they're depending on their bank statement. And so that is very true. Your bank statement is also a source document, because that's where you can see all of the money coming in and going out of the account. And again, you need to be able to balance that and use that to reference when you are doing and presenting all of those financial documents. Patricia, is there anything you wanted to add on source documents?
I think you've covered most of the important source documents, but what I would want to say is the importance is understanding that these are the inputs. And if you're baking a cake, if you miss on the flour or the baking soda, then the cake won't come out right. So it's very important to just understand in your business now, looking inward, what are the key source documents? Am I keeping them? Am I receiving them from clients? How do I activate receiving them from clients? If I don't set a quotation, maybe when I start billing, the source documents will not talk to each other. So all these are just confirming that accounting is a process. There has to be some steps that need to be followed. So yes, I think you've covered that.
Cool. And so the reason for all of this, especially the source documents and the inputs and outputs that we're talking about, is really to help you now prepare these three important financial statements. All right. So there's three that we're going to focus on. And these three are, the first one is going to be the statement of comprehensive income, which we'll talk about shortly. That's popularly known as the income statement. The second one is the statement of financial position, which we know is called the balance sheet. And then the third one is a cash flow statement. Patricia is going to unpack these for us.
All right, and I'm going to take the statement of comprehensive income. I think accountants have gone to just demystify and say comprehensive income as if it's something massive. It's the income statement reflecting the income report of your business at a particular specific period. So it is a range of time. It is specific. It says from this day to this day. So the report, it records revenue and expenses. And from that, we then have an output, which is the item that goes to your balance sheet, which is the retained income, be it a profit loss, and it gives you that picture in the business. So you can do the statement, you can prepare the statement monthly, quarterly, or annually. So it's up to you. But what's important, we encourage that businesses do it frequently monthly, because you then get to track what is going on. Let me break down the statement of comprehensive income for you. There is the first line item, which is very important and people tend to confuse. That is the revenue line. It is the revenue is the income that you generate from the goods that you sell, the services that you sell. So that revenue in all its totality, how you calculate it is you say the cost, the price, the goods, that the price of this item you're selling times the item you're selling, and then if you sold 20 items and they cost 10 rands, so you know how much your revenue is. So that understanding that it is specifically what you sell in trade of what you are selling as a business. So it's your trade income, that revenue income. Follow to that in your income statement or your statement of comprehensive income is an important aspect also, which is the cost of goods sold. Again, many small businesses suffer here, Darren. I see a lot, and I can relate to just the example that Molagadi also made about herself. I have a price, but the price is based on I don't know what, because I do not understand or do not input properly my cost of goods sold. So in that example, your cost of goods sold is exactly the cost involved in directly producing the goods or services that you produce. So it's the direct ones that if you would not input it, then the product will not be finished. So let's make an example here. A cost of goods sold for someone who is manufacturing steel, it would be the material substance that you put together steel. It would then be the labor of the people who take the steel to the combustion to burn it. So it's that specific labor cost. But the manager who sits in the office or the marketing sales team who will sell the steel are not part of the cost of goods sold. They are an expense in your operation, but they are not the expense related to producing that product or service. So I'm not sure, Darren, if you want to highlight anything there in terms of the cost of goods sold, because I do believe that we need to emphasize on this point, as many small businesses slack on this one, or even ignore it for that matter, and use some other weird formula to decide how much the product costs.
Yeah, I think you're hitting the nail on the head. I say continue. I don't have anything to add just yet.
All right. Noting that this doesn't include the general expenses. So the next item on your income, your statement of comprehensive income would be your operating expenses. Now these are all the other expenses, that you use to general expenses, administrative expenses, expenses of sales, officials, selling expenses, and all other depreciation costs. All of those that go into start coming in later once you have calculated your revenue, followed by your cost of goods sold, which will tell you the gross profit. There is this figure called the gross profit. I know you dealt with it at the last session, but it's a very good indicator if your business will proceed, because if you're at the gross profit level, you're dismally making a loss. How are you going to deal with the next expenses we're going to discuss, the operating expenses? So it also gives you that indicator. It shows you how really you are doing. You may need to sell more, you may need to relook the business that you are doing or you are involved in. So it's important at that stage to determine if the business is operating. Once you've got all that, you can then determine. You've got the revenue, you've got the cost of goods sold, you've got the operating expenses and all the others. You can then decide on calculate the operating profit. This is the net sales. This is sales after removing cost of goods sold and operating expenses. Then you get what we call the net profit. That net profit, again, is a good indicator where the business is going. It's a good indicator so that you can start deciding and seeing how much you owe the taxman, how much to report, and how much is going to go into your cash reserves for the balance sheet. So it's a very good indicator to show you. Follow that, there is also interesting income that usually comes depending on the business, where you have reserves and you get interest income coming from interest. So it's interest income. It's money that comes from reserves that you have or some investment, or you've got a fund that you put aside money. That is called interest income. It is income. You declare it differently in a line item. You don't include it to your revenue of your products, because that, by so doing, you are not mixing all the income and then deciding that your sales are working because you've got other income that is coming in. Similarly, if you would get income that comes from a grant fund, that is not your sales revenue. That's a line item of other income. You have to declare it's other income, but it's not necessarily your sales, because you need to be able to deal with sales and the cost of goods sold independently, so that your calculations and your input, going back to saying the input needs to be correct, so that the processing is done properly and the output is correct. There's also expenses relating to maybe you've got a loan, you owe a bank, you're paying interest. So that is an expense that also comes in after you've calculated your net profit. You can look at that. And you also provide as a business what we call provision for income tax. If your accountant or bookkeeper does your books, every time mid-year, halfway through the year, they say, we've done the calculation, this is the amount for your provisional tax. That's the amount preempting, looking at how the business is performing, preempting what is due to the taxman. And it's a good practice so that by the end of the year, you don't have a large lump sum to pay. So in that just comprehensively describes what happens in the statement of comprehensive income. I would like to stop here, Darren, and just maybe pause for people to comment, and you may have something to say.
Sure. So guys, if there are any comments on the statement of comprehensive income or the income statement, please feel free. If there are any questions, you can ask that as well. I think somebody's saying templates will be highly appreciated. Absolutely, those will be shared with everybody. So you will start receiving some templates to start putting in those inputs. Okay. I think, Patricia, so I think one of the questions I had as you were speaking was, what happens in a case where you obviously, let's say you are paying your rent as a business, or you are paying some accounts to some of your suppliers, but you pay late and there's an interest fee or a late penalty that is paid. Where would that go? Would that be part of interest expense as well? Where would you input that in your statement of income?
It comes as an operational expense also, because that's an expense incurred in the business, and you realize as you accumulate late payment gives you interest, it increases your expenses. So that also comes as an expense in the business, as interest expense. Or if you get a discount for paying early, it will come as income as a discount at the top, but it's a different line. It's discounted income.
Nice one. Guys, you're going to leave here as accountants after today. Patricia's doing so well. I think there aren't any further questions or comments, Patricia. Maybe we can move on to the second one, which is the statement of financial position, also known as the balance sheet. Yeah?
Yes. The balance sheet, simply put, Darren, I always say it's what you own as a business, what the business owns. So the balance sheet tells you what it owns, it tells you who it owes and what time it owes that person. But it's at a particular period. So what is important to note is the balance sheet will choose a point. So your balance sheet as of the 31st of December 2023 may differ as of the 1st of January 2024, because things could have moved. Various things that are elements of the balance sheet could have moved. So it is at a particular point. So when you interpret your balance sheet, you must look at it retrospectively, that it is talking about this particular point, and it doesn't go beyond the particular point. So at a specific date, you want to know what your business owns. You understand it. The balance sheet tells the reader what the value of the organization is. If you're looking for an investor, you'll hear them ask, please send me your balance sheet. It is in this balance sheet that they look at what are your assets in terms of your resources that you have in place for the business, be it liquid or those that are not liquid, which are not in the form of cash. So you look at those assets and then you look at what the company owes. Oh, these are the liabilities. If the liabilities are higher than the assets, what it tells the investor is that something is not going right. But it doesn't give a totality to say, then I won't invest. It just says there is an issue. Maybe that is why you're going to market to look for an investor, because your balance sheet is showing some negative input. So the balance sheet really, for me, what's important is you will be able, through the balance sheet, to display the asset financial muscle of the business at any given point when you look at it. And you'll be able to see, am I over indebted? Have I got too many liabilities? How am I doing with that? You'll be able to say the income that comes from profits or the retained income, how liquid am I? If I needed to get money instantly, how liquid is the business? You look at some of those things that you could quickly convert into cash to deal with either opportunities in business or handling crises. So the balance sheet is a very good gauge of how the business is doing. I know a lot of small businesses do not think about the balance sheet. Darren, it will be interesting to hear a story of someone who is like every time annually they look at their balance sheet and they say, yay, I'm doing well. Is there anyone who'd want to share an experience with how they handle their balance sheet?
While we're waiting for somebody to comment, I wanted to agree with you there that so many small businesses think I don't have much, I don't have many assets, and so it's not important to focus on. But here's the thing, especially as Patricia said, when you're looking for funding, when you're looking for investment, you stand a better chance of having somebody invest or believe in your business if you have a balance sheet, even one that shows that your liabilities are more than your assets, simply because you've kept a record and because you can explain what's happening in your business. That's already 10 steps ahead of the person who's just writing it down on a piece of paper, right? And so very, very important that you realize, even though you might think this is only important if your business has a lot of assets or your assets are more than your liabilities, it's not the case. You still want to do it because accurate record keeping really, really shows that you are able to manage this business, and that's how you get people on board to help drive your vision forward. Are there any comments? Is there anybody who would like to share or any questions pertaining to the balance sheet?
And Darren, while we're waiting for someone to raise their hands, one of the things that I would say is that you find small businesses saying, I don't have an asset, but most of the businesses run salons. They have a dryer, they have a blow, they have all different things, like the chairs, desks, and everything. Those things become items in your balance sheet. When you start a business and you can show that you've got a cooker, if you own a shisanyama, you've got a fry machine, you've got the crockery and everything. These things form part of your asset as a business, and they really come through as indicating that the business is growing and it's generating its assets for itself.
Absolutely. Even your laptop, your phone, those are assets in your business if you are using them to generate that income for your business. Brendan, I see your hand. You want to unmute yourself? And
just a quick thing. I used to own a construction company, and we had hundreds of thousands of rands of assets. Equipment, building, working tools, generators, what, loads of stuff. And I kept a record. We had a stock kind of thing. The point is that you need to control what you own. If you don't have a record and it disappears, you don't know where it went. We found through our records that some of our stock, our materials, were just disappearing out of the factory gate or the workshop gates on a regular basis, and we found the culprit, and they'd been stealing about 100,000 Rand worth of material from us every month. So that's the one thing. Nowadays, I've got a different balance sheet. I've got IP in terms of books I've written. I've got a laptop, I've got a computer. I think I've got a suit in the cupboard, but at least I've got a list, right? But it can change, and knowing is really, it's just part of the depth of your financial acumen. This is not the difficult one. Really, this is the easy one of the three sheets to put together.
Love it. Thank you, Brandon. Thank you so much for that input there. Let's move on, Patricia.
Absolutely. Thank you, Darren, and thank you, Brandon. Just before I move from the balance sheet, one of the things that are also important, which sound very complex, but they help you also for accurate reporting of your income of comprehensive statement, is the fact that if you have your assets recorded properly, there is something called the depreciation. So there will be a provision for depreciation that comes and assists also in terms of the accuracy of your profitability in your income statement of comprehensive income. So these are the things that show that these records are tied to each other. So we're going to move to the one that is very important, that a lot of people think it's just a document, but it is this, there's a saying that cash is king. This document reminds you all the time. I've had situations there in my business where I got opportunity and I couldn't take on the opportunity because I did not have the reserve. I did not have the money. I did not understand where to find the money in my business because my cash movements in the business were not kept at taps. So I got to learn that my cash flow is very important. The cash flow statement really is a summary of the amounts of cash or equivalents of cash entering the business or leaving the business. It's simple as that. So if you do not control what comes in, most especially what goes out, you tend to come to a fix when things happen. I hear a lot of small business saying, I'm working hard, I work 8 to 5, I work very late at night, every day, 7 days a week, but hey, I don't get to enjoy the money because at the end of the month, there is no money, I'm paying everybody. So if you are not doing your cash flow management, you will be in that situation because every time expenses will be a surprise to you because you don't know what to expect that's coming in going out. So that movement, it could be movement in your bank account, it could be through your cash register, depending how your business is operating, because some retail businesses like your spaza shops will have money that comes in a form of cash, and before they transfer it to the bank, they end up utilizing it in the shop, replacing something or buying something. I always dissuade people to avoid to transact that way, but sometimes you can't do that. It can't avoid that, to not use the money at hand, but money at hand is difficult to manage. So your cash flow needs to be even more stringent. If you have money, cash at hand, that you then go and buy input material, you go and send somebody to use it for transport fare, you send somebody to use it for whatever. So it is very important to look at that and manage how your cash operates in your business. Darren, it's vital to track this cash. Because you can then start preparing for future forecasts. Because for me, understanding your cash flow now, you can start projecting into the focus of how your cash will look like next month, how your cash will look like 3 months from now. Darren made an example of how he says he can tell he's going to at a particular time. He could tell at a particular time he was going to be 11,000 rands short. So it means what you do, you try and increase your sales, you try and do more, or you try and reduce your costs. So you're able to make those decisions as a business owner because you understand how your money moves throughout the month. So this situation is to make sure that you are aware that the business continues and you're going to be able to trade. So cash flows are a bloodline. If anything, as a business owner, you're sitting in a coffee shop and you're thinking about your business, just look at your cash flow every now and again. Fix it, look at it, ask questions. You have to engage your cash flow frequently. So with that, for me, the cash flow itself, the balance sheet, and the statement of comprehensive incomes, those 3 reports should really be at the pulse of any business owner, because no matter who prepares them for you, you need to understand what is going on. You need to sit with your accountant if you are using an external person, but try and understand, because that's where you make this. You get the tools to make the right decisions for your business. So that's that.
I'm going to read some of the comments in the chat. Rebone is saying, late payments also from clients kills the momentum of cash flow. Absolutely. And then Brendan saying, poor cash flow control kills more small businesses than anything else. And so I think that just reiterates what you're saying there. And then another comment that reiterates what you're saying there is, cash flow statement allows you to look into the future and take action to reduce lower expected incomes or plan ahead to spend extra income on growth assets or even a holiday. Nice one.
Absolutely. Yes, Darren, I think we've covered that, and it sounds like the comments tell us the participants understand the topic.
Let's move on to the next part of the discussion, which is taxation. All right, and so taxation obviously can be defined as an enforced contribution or payment by individuals and businesses to the government of the country, in our case, our country. Okay, taxation is not something we choose to pay, so we don't choose to pay tax. It is required by law, and if we don't adhere to this law, it is a punishable offense. We have a responsibility as business owners to be compliant. Okay, and so it's not something we choose to pay. We have to pay tax. Now, I know tax is very scary for a lot of small business owners. It's very overwhelming for a lot of small business owners, but it's important to understand that you cannot avoid tax. All right. There's a saying that says the things that are sure in life, 2 things that are sure in life: death and taxes. Okay. You will die and you will pay tax. And so make sure that you do that. So why do we pay tax? That's often the question. Like, why do we need to pay tax? Simply because taxes are used for the government to deliver services. That's in a nutshell, right? And so government has a social responsibility towards its citizens, and they are mandated to provide healthcare and education and all of those things. And our taxes is what funds all of that. And so this responsibility can only be realized, and the government can only deliver services if the necessary taxes are collected. And so again, that's why failure to register and comply with SARS requirements can literally lead to a fine or even imprisonment. And so very important that you, at the very least, try to understand tax, find out which tax you should be paying, how much tax you should be paying, so that you don't find yourself in trouble further down the line. Right, and so there are a couple of different taxes. I know, Patricia, you'd like to touch on just some of the various tax structures that exist.
Thanks, Darren. Yes, we have a shopping list of tax descriptors as listed below. But what's important, because I'm happy we've got a guest speaker whom we want him to actually go into depth with each line item of these taxes. But I do want to emphasize that as small businesses, we need to understand what tax applies to us and at what threshold are we at as a business, and how do we need to treat that. Because it doesn't matter whether you're not due for tax. I mean, you're below the threshold. You do need to do your annual tax returns. So you need to have a discussion around that. So we're going to get the guest speaker to detail most of these taxes, but I want to just pull out the small business corporation tax. This is generally the tax that many small businesses are entitled to use in their business. But the catch is that the business or the director of the business should not be a director in more than one company to benefit from the small business corporate tax. So it is very useful because the threshold is low, percentage is low, so many small businesses benefit from that. But if you've got multiple companies, you no longer fall under that. You have to go through to the income tax, the standard income tax grouping. So as a small business, you have to make sure that you are registered for tax. The format to register for tax is simple now. It has been simplified. When you register through CIPC, you automatically get your tax registration. Once you start having employees, if you register through UIF, you can start having your PAYE through UIF and report to the taxman through the Labor Department until, of course, your business gets to a certain tax threshold. Then you need a formal PAYE number. So I would encourage small businesses to use the BIZ portal. It is a platform that is available. It's a one-stop shop. It can help you when you are registering. You start automatically, you get registered with the tax and you get a tax number, and then from there you can get into UIF, the Department of Labor, and register for UIF. Once you register for UIF and you start paying for your employees, you are able to report to tax that your employees are below, I think the threshold is 7,500 a month per employee. If all your employees are below that, then they can still report to labor, to the SARS, to the taxman via the Department of Labor. So Darren, I think for me that it's just the understanding that tax is important. The various tax caps. We spoke elaborately yesterday when we were discussing with you and Brennan about value-added tax and why small businesses sometimes feel the need to register even though they are below the 1 million threshold, that is a required threshold, 1 million revenue threshold that is required to be able to be a VAT vendor. But many small businesses find themselves registering, and it's an onerous and cumbersome process to really every 6 weeks report for VAT. If you don't need to do it, I do encourage small businesses when I talk to them to not register. But we know that some companies and some databases call that people must have a VAT number, and I am not sure if that is really legal, but it is happening, and some businesses find themselves trapped. Unfortunately, if you are a VAT vendor, you have to do your reports every 6 weeks. And once you miss that opportunity, you pay penalties. Once you miss that opportunity, you are non-compliant. Automatically, you become non-compliant. So I'm not sure if, Darren, you want to add anything regarding the VAT or any of the taxes.
I think we'll keep the questions for our guest speaker a little bit later on. So guys, if you do have any questions about tax particularly, please note them down, and we will give you an opportunity. In fact, we want you to ask questions today, especially around some of the issues of financial reporting, of record keeping, and around tax. All right, and so but let's get into the quiz. And so we've got the quiz team. If you can launch the poll, and it should come up on your screen right away. Okay, so the poll is up. There are 7 questions. If you could please complete all of them, make sure you scroll all the way to the bottom. And then once you've completed it, click submit, and then please type in the chat, done. Right, I'm going to give it about a minute or two for you to do that. There's an interesting comment. Brennan's typed in the chat. I'm going to read it quickly with regards to the with tax. It says, tax avoidance is legal. You can structure your tax to minimize tax payments and make claims against deductible items and costs. Tax evasion is not, all right? So you cannot just avoid tax altogether. Tax evasion is simply not paying the required taxes, or ignoring and not submitting the reports required, or making no or inaccurate payments. All right, so very important that you understand what is tax avoidance and what is tax evasion. All right, thank you for sharing that. Are there any questions in the meantime? Are there any questions about any of the financial statements? And also maybe we can just open it up and see if there's anybody who would like to share maybe what it is that you've taken away so far from the discussion. Talk to us a little bit about how you are currently keeping records within your business, or what some of the challenges are. Maybe somebody wants to share a little bit about why it is that you find it hard to do these financial statements, or to keep accurate records. Let's open up the discussion. Sometimes you learn from what other people are doing. Sometimes you realize that you are not alone. You're not the only one struggling. So let's open it up and just let's get some input from some of you. So anyone who wants to raise their hand and just share about your own business. I think we can take the poll down, guys. Looks like everyone has completed it. Pearl says, sometimes due to sudden change in the market. Pearl, do you want to unmute yourself and tell us a little bit what you mean by that statement there?
I suspect Pearl was having problems with her connectivity. Probably that's why she's typing only.
Okay.
I saw Muraro. Muraro, can I pick on you? You said you have a system of recording. Just talk to us, tell us, share. Let's learn together.
Hi, I'm stepping out so I can share setting up as well. So on my side, I all the things that I have and then communicate that. But if there's no proper documentation or a record of what has been issued as a quotation and what has been issued as an
Muraro, it looks like your connection's not stable enough, and so we're losing out. Maybe you can type your feedback in the chat, or we'll come back to you in a little while. But I think for now, let me just check if there are any other chats or questions. We don't have any hands. So let's move on with the discussion. We have our guest in the house. He's no stranger. You all met him about 2 weeks ago, Mr. Mike Mokoka, who is our guest today. He's got years and years of experience, over 2-3 decades in the financial industry. He's probably been in every type of business you can think of, and has a wealth of information. Thank you so much for joining us, Mr. Mokoka. It's always a pleasure having you on the call.
Thanks, Darren. And how are you? And good morning, everyone.
We are all well. Where are you today? Where do you find yourself in this beautiful South Africa?
I'm here in Boksburg.
Got you. You look like you're coming from a courtroom today. So we're gonna get into the discussion. We've been talking about record keeping. We've been talking about financial statements. And I reiterated to everybody your famous saying where you say, if you can't measure it, you can't manage it. Would you say that's the reason why financial recording is so important?
Yes, financial recording is so important because everything, if you want to get to something and then you want to have everything about the business, record keeping is the best thing. And don't do it for compliance sake. Do it for yourself in order as your reference point, as also to track whether your business, which direction of your business is going. Because if you do it, I used to tell people that, doing good is a choice, you see. So, but if you are doing something for compliance sake, it's no more that you are doing it by choice. You are doing it because legislation say this. But it's always good to do things by choice and say that I want to see my thing, and I also doing that, and then it make it very easy for you to comply. Because record keeping, according to the regulation, you must keep every record of your business for 5 years, because if they want to audit you, they can come and audit anytime, and you must have those records of 5 years already available. But also you, as you record everything, then you get the mirror. You see, the recording is only picture of the business that can give you. Is the mirror picture of your business that you, at the end, you go and reflect, you see. Because always we need to reflect. We always learn by reflecting that where are we going wrong? Where are we getting it right? So that we can build in efficiency and build in improvement. And recording also is good for compliance tax purposes, also statistical purposes. Some of the business you find that now and then you'll get a submission that you have to get maybe it's a youth business. Statistics South Africa says submit this. SARS says submit it. But the biggest one that you have to comply with when you submit is SARS. You have to keep your records so that you'll be able to declare your income, and also know whether you have to pay tax or what, or you have to claim rebates if you are tax VAT registered. So record keeping is all about, is at the core of the business. Otherwise, you can't. You have to. It's the only measure that you can.
Thank you for that. So let's talk about the three statements that we touched on today. One is obviously the statement of comprehensive income. The second one is the statement of financial position. And the third one is the cash flow statement. Why do businesses need to prepare these three important documents or reports?
Firstly, the financial statements is all about the reporting of the business. It's when you want to know the performance of the business holistically, how did the business perform? But the financial statement is made out of those three that we have said, of which is the statement of profit and loss, your financial position, famously as the balance sheet. We used to call it the balance sheet. That is the health of the business. It shows the health. The profit and loss, as it is, it shows you it's a comprehensive income, statement of comprehensive income. It shows how much you got in, how much you used to run your business, how much were your costs, and then how much is your profit and what you need to pay. So that is the first measuring tool. And from that, we can deduce and go to the balance sheet, statement of financial position. Financial position is just to show us your liabilities and assets, you see, because if your liabilities is what you owe, what doesn't belong to you. You see, even if you are an owner, you put money into your business, it's still a liability to you, because that thing is an equity to the business. The business owe you that. You must be able to differentiate between you and the business. You see, so we just want to check that from this, how much that the business assets compared to asset, liability compared to assets. You see, so it gives us a snapshot of. That's what they call the balance sheet. It must balance whatever you put in, because in accounting we use debit and credit. Whatever you transaction must have a corresponding. That's why at the end of the day it must balance. Even if it balances, doesn't mean that your business is healthy. That is just that you have complied with an accounting principle. You have recorded everything correctly. But now we're gonna look at line item. Okay, how much is this current liabilities? Current liabilities is things that are due within a year. You see, those things that need to be readily payable. And then we go and look at, okay, this is his current liabilities. What are his current assets? Like cash. Does he have enough cash to meet these liabilities. And if that thing, it shows that your liability outweigh, your current liability outweigh far more than your current assets, that is a red flag. You must start to see that where are you going wrong in the business. It's part of those SE tests that you do, the quick tests that you do with your business. And also you can check that, okay, on equity, for every rand that I'm putting into this business, how much do I get back? You see, does my rent make me 10 cents? Does it make 30% of profit? So you use it for many things. You don't just throw it for compliance, but you use it to test whether your business is going, is it profitable or is it going to red? What needs to be done? Where can you build efficiencies and improve? And then the cash flow statement is just to show you the health of the business. That's why they say that the lifeline of the business is cash flow. You see, you can have all these things presented in good, you show that the business is making a profit, but we don't see that there's no cash to pay the things as they become due. So cash flow is just a measure that from your operating activities, how much do you get? How much from your operating activities do you get converted into a cash, you see? So that you know that my operation at least is bringing in revenue, enough revenue to keep the business going.
Mm-hmm. Let's talk about tax. That's obviously the next big thing that a lot of business owners battle with. And so must a business still submit tax returns even if it's not making a profit?
Yes, every year, even if you haven't made a profit, you must submit tax returns, because whatever tax that you haven't, if you made a loss, let's say this year you didn't make a profit, you submit your return. It says that, okay, you made a loss this year. So you will be able next year, when you do the next financial, to recoup those losses against your profit that you have made, and it will reduce your tax, your liability for tax. But if you don't keep records, you don't submit your return, how will they know that you made a loss for this previous year? You see, so it's compulsory to submit every year. Every year you must submit your return, and on your return you must be as honest as possible. You must be honest, not as possible. You must be honest.
I was gonna say, please define as honest as possible.
You must just be honest in totality. Don't try to play around with things. If you need tax advice, you see, there is a difference between a taxable income and income, or as we present in the financial statement. There are other things that when we do tax, we draw the financial statement in another way. The taxable income, it changes. So you need to get some, if your company has grown up, it's 10 to 10, a little bit complex, you need to get advices. How do you, so that we can be able to save you on tax and also submit them correctly? Because I used to tell people that, it doesn't mean that a company, if they got a negative cash flow, it won't pay tax. You see, it might still have to be liable for tax, or it can make a loss, or it can make a profit, but you find that the tax liability, when we come and do it a taxable income, now is no more have to pay tax. You see, so you need to, tax planning is the core of the business. That's why we prepare from the statement of financial position is where now it helps you to prepare to submit to SARS what is due to them.
Got you. Let's talk a little bit. So we obviously spoke about the fact that there are so many different tax types and so many different taxes that you could register for. So for most of the entrepreneurs on the call today, small businesses who are still starting out, who are still growing, what is the best tax system to register for? Where does one start?
I will ask them, I will give them advice. The best advice is to go and register as a small business. Go to SARS, go there and ask them to be registered as a small business. If your turnover is less than $1 million, and then after that, and register for turnover tax. Once you qualify as a small business, then you register for turnover tax. Then we don't have to go through all these other things. You'll just have to show your turnover. You don't need to calculate all other things, the profit and all those things. On the turnover, and we look at the turnover, we say, okay, from 300, I can remember about 323 something. Yeah, you don't pay any tax. And from there, it goes on a sliding scale that, okay, over and above that 1% and all those things. So it's tax simplified. So I'll advise them to go and do turnover tax. It will make their life and also focus on growing their business, because tax burden, it was predominantly done after a lot of small business. Government was lobbying that, these are small business, try to establish themselves, but you have this cumbersome, complex tax system. Why can't we do simplify, so that more of their focus is on building their business other than compliance?
Gotcha.
Just Mike, on the turnover tax, there's also the small business corporation tax. How do these two differ? Because I would have thought those are both for small businesses.
Small business tax is where you have those companies that they are doing over $1 million, okay, but they're still regarded as small companies. So the difference is that they get some tax concessions that, okay, we'll tax you from this to this. The rate is kind of a little bit lower to encourage them, and they incentivize them. As long as you open up, submit the correct thing, then you'll qualify. You see, so they incentivize small business so that they make it a little bit simpler for them, and also not a cumbersome for them to comply with all. The tax system, tax is so complex, so it makes life for a small business a little bit better, even if they are over 5 million. So there's a 1 million turnover, so they can go to that next level of a small business tax, where is simplified and is also on a scale that is a bit lower, to give them that. Yeah.
There's a question that says, what is the process of submitting your taxes for a business? When must it be done? And how does this differ to your personal tax submissions?
Your tax, it depends. When you have your company, you'll always have your year end. What is your year end of the company? Depends when is your tax due. You see, if I'm a business, I know that my financial year end is February. Then I know that after February, I must prepare and submit to SARS. They might give you a leeway of about 3 months that you must draft and also submit your tax returns. So it depends. After your tax year, you must start preparing for that, do your financial statement, and also submit your tax. With the personal income tax, it runs from March to February each year. So that is linked to the government tax year. It's just like that. That is personal one. It's only we have that thing. They'll always publish a notice. When are they due? After if you are employed, they'll give you IRP5. And also, if you work for yourself, you have to pay yourself. You must also make that you register for provincial tax, that you can pay it. Provincial tax, the beauty of it is that you can submit it 2 times a year, so that they reduce the burden, that you don't submit once while it's so big. During the year, 6 months, you can do the 6 months projection and then say that, okay, submit if you are a provincial taxpayer and pay provincial tax. But businesses, it all depends on that thing. And also on that small tax, whatever, you don't have those complex provincial company taxes and all those, because they can be too much complex, because you need to do the base year and all those calculations, you see.
Got you. Guys, are there any other questions? If there's anyone with questions for Mr. Mokoka, please ask, please raise your hand or please type it in the chat. There was one question that was asking, is the auto assessment by SARS, does that benefit us and how does it benefit us?
Auto assessment, it does because, we are living in the world of AI, but it's not always correct. You see, so you have to, if you look at it, you must look at it and compare it with your records. And if you feel that the records, and then always go amend, decline it, and say that, okay, I want to present my own finance statement, because they just take it holistically, whatever they search you from other financial institutions, what came in basically, and then they will try to estimate on that. But on personal tax, if you are employed, it's very much simpler, because your employer submit you reconcile and submit their employee tax return for the year reconciliation, so they get the information from there. If you didn't have any other income other than what you are employee tax, income tax, then in most cases is correct. It benefits because you don't have to go and do that. You can just accept. But if you have a business like where you are, but you still earn an income somewhere, then it's better to do it and say that, no, I want to edit, I want to give you my full picture and submit all my expenses and whatever, because in business, in most cases, they won't know what you have spent.
Got you. There's a question saying, please expand on how tax returns are different from CIPC returns.
Tax return, CIPC return, you use the very, in essence, what you are supposed to be using. Because CIPC, in most cases, wants to look at you from the turnover perspective, but also the very same that you use in SARS, because they are all government agency interconnected. You must use it with CIPC. They want tax you at that very high rate. They've got their own rate. They look at the turnover and say, oh, it's a small business, pay so much. But most of the tax you pay through SARS. The one for CIPC is just for compliance, to activate the company for the company to be active, so that it can be activated. But you submit the very same of returns that you have given to SARS, because they always compare. We live in the world of AI. If whatever goes there, they always go and check on the other side.
Gotcha. And then let's see if there are any questions, any further questions. Please feel free to type them right now in the chat. Patricia, I don't know if there were any other questions from your side. I think you're on mute.
I'm good. I think Mike really captured it and simplified it for the participants in terms of just understanding the importance of understanding the different taxes, and how you could take advantage of choosing the right sort of tax method to benefit your business, the size of your business, looking at your turnover. So I'm good with that.
Mr. Mokoka, I think before we say goodbye to you, what is your final advice that you can give to entrepreneurs who are on the call today with regards to record keeping, financial statements, and even tax?
What I can say to them today is that, you know what, for SARS, you can run, but you'll never hide. It will always catch up with you. So just try to declare you're honest, and if ever you are not sure, go seek advice, and then tax advice, then you'll be advised appropriately. Even there at SARS, they are so open that if you feel that you don't want to pay, they are so open that they will give you a person that will advise you and go through you and help you with submission of your returns. So in most cases, but what is the core of the matter is to keep records and supporting documents. Please don't just keep records and throw away the thing. As a bookkeeper, we used to say that, small business people, I don't know why they like to put their sleeves in this box of shoes.
Shoe box.
in a shoebox. Get yourself a filing system where you file so that, you know what, you file it, you put it neatly every month and then month to month so that it's never be cumbersome. When anyone wants something from you, you can always take that. And nowadays, most of the banks, they also give you those kind of a free softwares, accounting software, where you can keep your books. You can subscribe and keep your books, which are very simplified software. As long as you do it with your bank, it always upload your bank statement. It will tell you what you have used for. You just have to go there and then maybe reclassify whatever. If ever you just paid cash, then you go reclassify. Oh, this was for this. This is an expense for this. This was for my drawings. You see, so that you keep a proper record and keep it. But you can still do manually. But as young people know, don't go manual. Try to go high tech. There's a lot of free things out there, you see, that you can use.
I think one question that was raised when you were speaking, you mentioned please keep records and please keep supporting documentation. Maybe you can just expand for us when you say records and when you say supporting documentation. Give us examples of what those are.
No, when I say you keep records, you keep your ledgers and everything. Like if you got your software, you must always have a backup. You can print it, put it in that thing. Some print them, put it in your cloud, because you never know when the system is gonna crash. And then all the slips, invoices, whatever you pay, you get invoices. Make it a culture. Whatever you pay for, give me an invoice. An invoice must be addressed to your company, have the name of your company, details of the supply, and details of your company. You see, if you are VAT registered, it must have their VAT and your VAT on it to comply as a tax invoice. You see, so keep those things as records, because should there be an audit, they will ask for them. They won't just look at your financial statement, your record, but they will need supporting documents to say that, okay, whatever you allege on your statement, you claim, you can prove it, that okay, this is what I did. And also keep your bank statement, prove that, and try as much as possible to pay through the bank. Do try to and avoid using a lot of cash, because cash sometimes you forget how to record it or record it. So if you do it through the bank, you always have the bank statement that will always as a reference point.
Thank you, Mr. Mokoka. As always, you are a wealth of wisdom. You give such great insights, and I think you really empower the entrepreneurs on this call. I always learn so much when we get to have these chats with you. Thank you so much, and enjoy the rest of your day.
Thank you.
Thank you.
Let me go back to our screen. All right, guys, so that's it from Mr. Mokoka there. Always a very insightful conversation. I think we don't have any further questions, and so let me quickly remind you before we say goodbye, the next webinar is on the 27th of October, all right, and that we are going to be talking compliance. So please make sure that you do attend that one. Obviously, there is homework that will be sent out. The recording is available as always. And Patricia, is there any announcements that you want to make?
Yeah, from my side, thank you guys for the whole morning, having spent time and listening to you and learning from some of the things you do in your business. And thanks, Darren, for having me today. Coaching, please get hold of your coach, speak to your coach. Take the advantage of having your coach with you. Please talk to your coaches, guys. Those who haven't made their appointments, we're going to the third coaching season, session. So if you are not able to go into that, you probably are starting to miss a lot from the program, and it's not good. It doesn't look good. So if you don't know who your coach is, please ask Iviwe. Coaching is important.
Rebone, I see your hand is up. Do you have a question or a comment before we say goodbye?
Okay, good morning. Good day, everyone. And thank you for the insight. Yes, I remember there was a guy who used to make tax clearance for me, and he usually asks me for about 250 to get tax clearance for me. Then I went to the other lady, she's also an accountant. And then she asked me around 600 or so. Then he said, no, it's for professional tax. So I wanted to know the difference between, because that guy never like said anything about the tax, professional tax also. Cause, and the lady wanted to, like, she wanted the records, the financial statements and everything. But the guy, I just gave him my tax income tax number. Then he issued the tax clearance. So that's the difference that I want to know about.
Got you. I see we've got Mike has already left the call. Patricia, are you able to add some insight there?
I can just take it and then maybe I also ask Brennan if he's still here. I think what happens is, what's important to note, Ribone, is that the process of record keeping starts from the source documents. So if you give no source documents, probably they just use an estimate that you are below the threshold of tax, so they just do a tax clearance for you, which is not an accurate record of your business. But the person who will get all your information to compile your records, I think this webinar specifically was trying to indicate it's important that you are involved in understanding how these records are prepared. And if you understand, then you'll be able to empower your accountant with giving the right source documents, and then your information will be accurate. Whether you had to pay provisional tax at some point, it is based on what comes out when they process your documents. So I think the pricing for me, it's just whoever's fees that you're working with. And I think Mike did mention that you can actually go into SARS and you can get a consultant there to help you. But if the accountant you trust and you understand, work with your accountant or the person who does your tax returns.
I think that's great. Let's leave it there. Let's get everybody's cameras on. Let's get our group picture. I'm going to take the screen down and let's see all of the great smiles. Again, just a big thank you to everybody for participating in the program. Thank you for being here. Thank you for being so engaging. I know it's a little bit difficult sometimes with the network issues, but I think we've got a lot of input from you today, lots of engagement. So thank you so much. Team, you can capture your pictures. You can get your pictures. Everybody smile. Check the hairstyles on fleek, earphones on fleek. Good to be with you all as always. And again, thank you so much to the Asisa Foundation for sponsoring this program and for putting it together. I think if anything, we are learning so much. And I know that the business owners on this call are super, super grateful for the information that is shared every single week. Look at there. Who's that giving a nice heart there?
It's Muraro.
Muraro, thank you for the heart there. Okay, guys. So well done. Thank you. Prepare for your pictures. We'll see you in 2 weeks for the next webinar. Let me get a video of all of us there. All right. And so that's it from our side. Have a great Friday. Have a great weekend. And remember, take advantage of the coaching. Please, please, please be engaged in the Facebook group. If you have any issues, feel free to reach out to Ibiwe. Have a great weekend. Have a great day further. See you in a couple of weeks. Bye-bye.